Hey, assalamu alaikum, and hello everybody. Welcome to the financial review webinar for the car share investment opportunity that we've presented. Unfortunately, I didn't record the webinar properly, so I'm going to just go ahead and record this for you guys on my own for anybody that was not able to attend, and I will go over all the points that we covered during the webinar. I will also try to cover as many of the questions and answers that came up, and we're going to go ahead and dive in. So at this point, everybody that is watching this video has signed an NDA and hopefully attended the first webinar that we presented about the Turo investment opportunity. Just as a quick summary, Bilal started investing in Turo, in this car share investment opportunity a few months ago. Saw a tremendous amount of success in terms of the return on investment and basically started expanding the operation from there. Today we're at 23 cars, and I hesitate because the cars do change. We sell some, etc. We add more. So we're at about 23 cars and expanding very quickly. Our goal is to get to 100 cars, and our expectation is to be returning a 30% ROI in this company, which is phenomenal for a new company. So the opportunity that we presented last time is this to be a completely passive investment opportunity where you invest with us at one of three levels. And we call them the gold, silver, bronze plan. The gold plan is an investment of $25,000 where you get a 50% return of your share of the profit. The silver plan is at $15,000 where you get 40% of the profit share. And then finally is the bronze plan at a $10,000 investment, and you get back a 30% profit split. So I'm going to cover that as well, but that's kind of the opportunity. We're super excited. We think there is a lot of opportunity coming up that is related to this business in terms of other car platforms, in terms of home sharing, fleet sharing. There's a lot of things that are emerging. This is a exploding marketplace in terms of opportunity. I think we're at the beginning of it, and the projections are that it's only going to get bigger and bigger. I think it's somewhere valued at about $25 billion in the US, and I've heard projections that it could go up as much as $200 billion within the next very short future. So that's a quick recap, and now let's jump into the actual numbers. So we promised basically to do a deep dive on our finances so that you could see exactly what you're going to be investing in, how the fleet is performing today, and where we are hoping to be very, very shortly. So let me get this situated. We're going to focus on the left-hand column first, which is basically our actual performance. So these are April numbers. So this is the actual performance for April. And then we're going to talk about a few scenarios that we are trying to optimize the returns on. And then I'm going to talk about on the right-hand side your investor returns. Okay, so there's a lot of data here. So bear with me. You really want to focus on this and not be distracted because it can get confusing a little bit with the numbers, but we've tried to make it as clear as possible. So let's go ahead and dive in. All right, so April actual numbers. This is the actual performance that we have in our fleet today. These are the numbers that our accountant would be looking at. So let's go through this. So essentially we have the revenue, capital invested, how much money we've put in, and what the actualized return is, the total return on that investment. So our revenue numbers across our 23 cars, and it's not actually 23, and I'll explain that in a little bit, but let's just say for now, we have 23 cars in the fleet, is $8,000. That's how much the company made in April. To date, in the last few months, we have bought $291,359 of assets. This is essentially vehicles, the 23 vehicles that I was talking about. That is what we have invested in for our fleet. And our return on that, if you calculate this, is a 33.64% return. If we extrapolate these reasonable numbers, and we actually have reason to feel that they should be much better. If we extrapolate this to a year, then you're basically looking at a $98,000 revenue in 12 months. The investment would stay the same because let's just assume that we're not buying more cars. And so you'd be looking at that 33.64% return. Okay. So then the next scenario, this is again our actual numbers, and we've only been operational for 2-3 months. And as you know, most businesses go through a significant optimization period. You know, you learn a lot of things. You are able to fix issues. You are able to smooth out and streamline processes and essentially drive efficiency into your organization to increase your bottom line. Okay, and that's exactly what we're doing here with Optimized 1 and Optimized 2. These are two different scenarios that we are currently looking at and driving into our company so that our bottom line can increase. So let me walk through the first one here. So our first optimized scenario is we looked at the entire fleet of 23 cars and we said, okay, from these cars, who are our top performers? Who are our bottom performers in terms of the cars, the actual vehicles? And so based on the analysis, we said, well, what if we took our bottom 8 performers that are not doing so well? And I'll explain why they're not doing so well in a few minutes. But let's just say we took our top 11 cars and we just did the ROI on those. So we sell off these bottom 8 or we replace them to vehicles that are more similar in profile to the top 11. What kind of return would we expect? So we crunched the numbers and basically the revenue it would be $6,000 because we've removed 8 cars, so we lost a little bit of revenue there. Our investment, that vehicle the fleet would be worth $124,000. Because we would have sold those 8 off, we actually recover that capital. And our return on these would be 61.83% for our top 11 performers. And then if we extrapolate that over the year, you know, we would have made $76,000 as a company. Our investment stays the same. So that's almost double yield on that. That is almost doubling the ROI from 33% to 61%. So then we said, okay, well, you know, the top 11 are pretty good. They're doing really good. But what if we optimized it even more and said, how about if we get cars that are closer to our top 8 performers, which are really doing well, even better than the top 11? So we ran the numbers again. And essentially that brings in a revenue of $4,983 and a total investment of $78,000. And that is actually a crazy return of 75.76%. So this is our actual return with our 23 cars where we are currently doing 33%. If we take only the top 11, sell off the 8, we would be getting a 61%. If we take our top 8 only, we would actually be at 75%. We feel it's pretty easy for us to actually get rid of these bottom 8 and replace them with cars that are more similar to the top performers, the top 8 performers. Now, any new business that is less than a year old, and literally, you know, we are less than 6 months old. If you were to tell anybody that your company that you're invested in is doing a 33% return in less than a year, that is unheard of. I mean, that is just phenomenal. That's hyper growth because of this on-demand sharing economy, and that's why we're so excited. We feel confident that we can take our performance from this scenario of 33 today to 61 and then ideally shoot for 75% return. Now this is business, and I'm not going to make any promises, and we are not, Bilal and I will not make that promise. However, our goal as business people is to drive as much yield as we can. This is our target. This is what we're going to shoot for. To be honest with you, if we land anything under this, even here, I would be very happy with that as an investor. 61%, I can't think of any business that's going to bring me that back. Not Amazon, not e-commerce or Shopify. Very rarely are you going to find a business that returns that. And we feel confident we can do that. And I'll share why we feel confident in a moment. Okay, so I've walked through, just to summarize and move on, our current numbers, optimized numbers, if we take only the top 11, get rid of the rest, and our top 8, and then we swap out the rest of the fleet to perform as similar as that. These are the numbers that we get. Now the question that you're asking is, well, okay, that's great for the company. What's in it for me? What do I get out of this as an investor? Either the gold, silver, or bronze. So that's what we did over here. So now we're going to move on to this column, the right-hand column. And we're going to give you a scenario against each one of these scenarios. So let's just take the actual, okay, where we are today for April. So let's say you are a gold investor and you put in $25,000. Now, you would be getting a 50% profit share, okay, proportionally of this revenue. And we calculated the numbers. In your first year, you would be making $4,205.55, which for your investment is a return of 16.82% because we're sharing this revenue. So you're getting half of this, 33. You're getting 16, okay? Again, 16.82%, very hard to find. You can't find that in the market these days. You can't come anywhere near that in the market these days. You can't find that in real estate. It's just hard to come across this kind of opportunity. The other thing about it is that this is completely passive. You're not doing anything. You're simply investing. Similarly, if you're a silver and you put in 15,000 and our performance is 33.64, you get a 40% share of that profit. You would be earning $18.66, and you would have realized a 13.46% on your $15,000 investment. And then likewise, as a bronze investor, you put in 10K, you get 30% of that profit split. You make $1,009.33, and you would have got back a 10.09% for doing absolutely nothing and simply writing a check. All right, so that's actuals. Again, we're not happy with just sitting at actual. We want to move on to optimize and continue to improve our business month over month. So now let's move down as an investor to our first optimized scenario. So we go ahead and we get rid of those bottom 8 cars that are not doing as well. And we swap them for cars that are more similar, like the top performers. How would you do then as an investor? Well, let's go back and look at it. As a gold investor at 25K, you get 50%. Your return now would actually be $7,728.45, which is a 30.91% return on your investment. Now compare this with where we are today, that you're at 16.82, and now we almost doubled that at 30.91. Same scenario for the 15,000 at 40%, you would get back $3,709.66, and you would have made 24.73% on your money. And similarly, if you are a bronze investor at 10,000, and you would get a 30% split, which is $1,800.54, and $1,854.83, which is a return of 18.55% on your $10,000 investment. And then the last scenario, if we target all of our cars to be similar to our top 8 performers, then as a gold investor, you're going to collect $9,469.42, which is a return of 37.88%, almost 38% on your money. As a silver investor, you're going to make just a little over $4,500, $4,545.32 to be exact. And your ROI, your return on your money is a little over 30%. And lastly, the bronze investor, at 10,000, you would have made $2,272.66, and that's a return of 22.73%. So now, really important thing to understand here, and we've mentioned this in the first webinar, but I want to remind you here. Let's assume a scenario where at the end of year one, you decide, hey, this was great. I'm enjoying my returns, which you're going to get every quarter. I want to take my money out. Now, you can take your money out at any time, but if you take it out in less than a year, there is a penalty of 50% reduction on your share. Okay? So ideally, you don't want to do that. But you don't lose anything, even if you do. But let's just assume at the end of the first year, you decide, you know what, I need my money, I'm going to purchase something, whatever it is. You not only get back your return of 94.6942, but your capital is preserved. Okay, you have to remember that. So you would actually get back 25,000 plus 94.69. So you'd get back, you put in 25 and you get back almost 35,000. Same thing for each one of these. If you put in 10, then you get back your 10 plus your 22.72 and 66 profit. Okay, so capital is preserved. Yeah, that's very important. All right, so why do we feel confident that if we are today at a ROI of 33%, that we can actually be somewhere between 61 and 75%? So with that, I am going to jump over to the next page. And I'm going to apologize in advance because this is a little bit like back of the fridge. There's a lot of details here, but let me walk through this with you. So this is right now our actual fleet performance numbers. This is where it's one of our dashboards. We've got many dashboards, but this is where we're recording some of this information. So I said 23, I'm sorry, we actually have 24 cars. Okay, and like I said, we're always changing, we're always buying, so that number kind of changes. So we have 24 cars. You can see the city. So Austin, Dallas, 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 here's another one in Austin. Dallas, Dallas, here's another one in Austin. So Dallas is where we started, Dallas is where Bilal started, and now I'm in Austin. We've started expanding in Austin. We brought 3 cars to Austin, a BMW 328xi, a Mercedes-Benz C330, and a BMW 750 Li, the big BMW. And so what I can tell you is we're testing and we're expanding markets. We don't want to be just sitting in Dallas, although Dallas itself is such a huge metroplex that we feel we can easily go to 100 cars in Dallas alone. But we're looking at Austin. I'm sorry, we're not looking. We're already in Austin with 3 cars and we're going to expand. We're looking at San Antonio and we're looking at Houston, and then the sky's the limit. As soon as we find reliable people on the ground, people we trust, operations manager, we're going to expand into those metroplexes. Most of the cars you can see here, so this is the make and the model, obviously. BMWs, Mercedes, Lexus, BMW, Mercedes, Lexus, BMW, Land Rover, Chevy Corvette, which does phenomenal. BMW, the Land Rover does amazing as well. Camaro, etc. So, you know, high end, high scale. One of the things that we've learned is that Austin, these cars are not doing as well. Austin seems to be just a different kind of town, culturally speaking. The Priuses, the Toyota Camrys, the more value-driven cars seem to be doing better here. So this goes back to what I was talking about. We're going to swap out some of these cars for the destination, for Austin. And we're pretty confident that they'll do a lot better because we've looked at our competition as well. And I'm going to talk about that shortly as well. Okay, so year. So you can see here 2014, that's kind of one of our newest ones. 2013, 12, 7, 2008, 2011, 2008, 2011, 2007, so on and so forth. So we like to get cars that are a few years to 7 or 8 years old. They still look amazing. The interior is still very, very nice, and renters really enjoy them. Turo also has a policy that you can't get a car beyond 2005, I believe. You can't get a car older than that. So they don't want old cars in there, for their customers. And then also the cars have to be less than 130,000 in mileage. And we tend to get cars that are a little newer, nice, but they've lost a lot and they've already depreciated a lot. And we all know luxury cars depreciate very fast. So we're able to get really good deals that look great. Renters love them and they rent out really well. All right, so let's move on. We don't need the VIN here, purchase. So you can see our purchase date. We started this business back in November, just with a couple of cars, started testing it out, and then started growing it. Christmas, we got a few more, et cetera, et cetera. All right, here's the cost. Here's how much we paid for each car. So you can see here, a few expensive ones, the BMW 328 2014, $16,000 for a car like that. That's actually not very expensive. The X5 was expensive at $24,000, and I say relatively expensive compared to the rest of what we paid. We do buy all of these wholesale. We have a authorized dealer's license, so everything we buy is wholesale, and so we have some economies of scale over there. But on average, you can see we're spending anywhere from $7,000, $8,000 up to $15,000 or $16,000 is kind of where we like to keep it. There are a few exceptions, but that's kind of the range that we like to buy the cars in. Okay, so plate number, expiration, total. Okay, so here, this column is the depreciation. So this is on a schedule of 36 months is what we're doing for our cars. We're depreciating this 1/36th every month. Okay, so the BMW 328 has a depreciation of $365 every month. All right. All right, and then we jump over to this table here. So that's the fleet, okay? All the specs, you can see the cars, you can see the models, you can see the age, you can see what we paid for, etc. You can see the depreciation. And then here's our actual performance numbers, okay? The tables that I showed you in the previous slide come from here. So we can see, let's go look at, we can see in the month of April, each car generated this much in profit. Now this is after the Turo fees, this is after the car washes, this is after the oil changes and repairs, etc. Okay, so this is all profit. So you can see it adds up to a total of $8,000 for the fleet, all right? And then for each car, we also calculate what the ROI is. So the BMW 328 was only a 5.39% return. The next one, the BMW X5, was a 29.55% return, and so on and so forth. And then we have rank. So our rank is telling us, do you remember I mentioned our top 8 and top 11? Well, this is where we get that from, right? So we're ranking all of our fleet to see what's our best to least optimal car. So let's take a look at that for a minute. So if we look at the rank, we can see here number 1. Our number 1 car, which is actually a Chevy Corvette, 2005 Chevy Corvette, which we paid $14,000 for. We made $1,300 for that car, and our return on that was 111.84%. We love that, right? Obviously, we love seeing that kind of a return. It's a very popular car, so we know that we got to focus on that car, maybe get a few more of those. Our next popular, most popular, best performing is this one here, number 2, which is actually a Land Rover HSE. And the Land Rover also made us $1,000 and a ROI of 88.4%. Okay, so we really like these cars. Now let's take a look at our worst performer. Okay, so if we look at our rank, our worst performers right here, number 19 in rank. This only gave us a 0.3% return. we made a total of $3 on this car. All right. So what car is this? This is our Mercedes-Benz GL4 2007. Okay. Our next worst car, I hate to call it worst car, but our next suboptimal return, let's find number 18. It's down here, number 18. And that one is the BMW X5 2014 gray. And that only made a 3.53% return. All right, and then let's do one more, 17. This is the BMW 328xi. This only gave us a 5.39% return. Not very good. And let me see here. Okay, and you get the picture. So now we have these top performers, we have the bottom performers. Here's the reason for some of these bottom performers, and you can see this in the note over here. The first one, the BMW, in the middle of the month, we brought this to Austin. That's going to have a big impact. So the car was basically off the market for about a week while we brought it here. We put the listing up here. It's a brand new car over here, etc. So that 5.39% is not really an actual return. It should be much more than that if it was steadily in the market, but it wasn't in the market. Let's look down at this one here, 0.3%. So what happened with this GL4, the Mercedes GL4? The customer lost the key, all right? So as a result, and unfortunately that was our only single key, the car went off the market. And you know, replacing keys on these expensive cars, it takes a while, and they are expensive. Now, fortunately, we have insurance from Turo to cover these type of scenarios, but it obviously is not on the platform making us money. Sorry, I'm going to just turn that Skype off. Okay, it's not making us money. And so as a result of that lost key, we didn't make any money from this car. Similarly, this one here, number 15. So number 15, this is a Mercedes-Benz CLS 550. This car was only rented partially in the month because there were some issues with the engine, had to be repaired. It was also off the market for half the month. So again, that 12% is not really accurate. Let's look at this one here. This one here is the Lexus RX 350. It's a very nice car. It's a red, very shiny, very nice car. Now, this one didn't count at all because the car was removed from the fleet because it's Bilal's personal car. Actually, I think it's his wife's car. She was upset about not having her car. So it got pulled out of the fleet, all right? So we didn't count that one. But these are the kind of issues some of the issues that we're seeing in our bottom performers, okay? Key, you know, out of commission, engine issue, etc. So as we optimize that, we expect that it's very reasonable to start increasing that 30% ROI. Let me go back to that here. Okay, so here we go. So 30% today with all those issues. If we start taking those issues out and we start selling some of the cars that don't do well, we can easily go from 33 to 61. Okay. All right, and then a couple of final things on this page. Again, the depreciation is 36 months. Again, we do expect that we're going to create multiple revenue channels with this. If we're selling cars on a frequent basis, well, guess what? There's the genesis, there's the beginning of a car sales business. Now, we didn't start this business to become a car dealer, and nor do we want to become a car dealer. However, it's essential that we do that to keep our fleet fresh. Because we buy them wholesale, we are able to sell them at retail. So that revenue that comes from there can actually also add to the bottom line, helping our ROI go from 30 to 50 or 40 or 60% as we would like. All right. Okay, so that is an overview of the numbers. And again, there's a lot of data. You may want to watch this webinar a few times just to take it all in. I mean, we've spent a lot of time on this data, weeks, because again, there's just a lot to take in. But let me summarize. Our current performance for April is 33.64%. we feel very confident that we can boost this return to at least 61.83 with a target of getting it up to 75% by taking out some of the suboptimal performing cars that are not performing very well, and replace them with the cars that are more desirable to our customers, and start getting better efficiency and better returns for our investors, for you guys. All right, what's the next step? So I've shared the numbers with you, and I'm going to share this PDF file. I will send this out so that you can study it in more detail. And then if you have questions, you can contact Bilal, Bilal@boldlegal.com. You can contact me, Naeem, at socialcurb.com, and I will be happy to, Bilal will be happy to answer any questions that you have at all. Bilal is in Dallas. You can go and see him at his law firm that he owns. You can come and see me. I'm in Austin. I'll be in Austin for another 2 weeks. After that, I'm actually relocating to Tampa. So if you've got any friends or family there, I'll be more than happy to sit with them. Or if you're there, I'll be happy to sit with you. So you can contact us following this with any questions. The next step for you is, many of you have already signed your agreements. Many of you have already, we've already received your funds. And those of you that have not, again, I'm going to remind you, it's a first come, first served basis. What that simply means is, the faster you get your money in, the faster you start taking out the returns and enjoying the ROI on your investment. Okay. And then lastly, we do have a refer a friend program that we've started. And so for any friends, family members, network, people in your network that watch that first webinar, and I can send a link to that as well, and sign on and become a committed investor, we're going to cut a check for you anywhere from $500 to $1,000, depending on the investor level that they join us. So it's a nice little way for you to get some returns and make some money there. So we're happy to do that. All right, so the next thing, now that we've looked at the numbers, I want to share a couple of other things with you here. So if you haven't spent time on Turo, I do advise that you check out Turo.com, because all of our cars are sitting there right now. And this is a great way to understand the business a little bit. This is one of our cars right here. You can see that. There's a nice BMW. Let's see here. So what I want to show you, so this is actually our profile. So first of all, let me just show you Turo really quick. So let's say I look at a big city like Miami. Or you know what, let's do Dallas. So I pick Dallas. I can find what cars are available. And here we go. So this is a listing of cars that are available on Turo for me to rent on 5/19, so tomorrow, through 5/26, for a few days. So here's a Scion. And you can see here, let me find one that has been rented. Okay, you can see here, Toyota Corolla, right? You can rent this car for $39. It's a 2014. It's been taken out for 145 trips, and it's got 5 stars. I like this car. So this is, again, going back to what I was talking about, optimizing our fleet. Now, we haven't been doing a whole lot of low-end cars, but Bilal and I have talked about that, and we've observed the cars that are doing really well and beginning to experiment, beginning to bring in some of these different models. So we're definitely looking at value-based cars like this that potentially have a huge ROI. There's a new listing of Ford Taurus, Volkswagen Jetta. There's a new listing, okay, Jeep Liberty. You can rent for $35. It's got 15 trips. So on and so forth. Here's an Acura, 40 trips, so that's doing pretty good. There's a Toyota Camry, 23 trips, $40, so on and so forth. So you can do your own research here, but this will help you get an idea of what Turo is about. Now let's go take a look at our cars here. So you can see all of our cars. I'm logged into our Dallas account. So we've got the Acura, we've got the BMW, etc., etc., etc. Okay. So, you know, the fleet is definitely growing. All right, next thing I want to show you is our earnings. And again, I'm sharing this with you because you guys have signed an NDA. So, you know, we're one of the things that Bilal and I discussed from the beginning was we want to be as transparent as possible with you. And we have absolutely no issues with any of you requesting our books, requesting earnings, any of that stuff. Because, you know, for us and hopefully for you, this is a long-term opportunity where we're building a empire together. It's not a short-term, you know, what can I do in 2 months, right? If that's what you're looking for, this is not the business for you. Now you could do it, but you know, ideally we want to create wealth and we want partners like you to join us to do that. So we're happy to open our books and be completely transparent. That's the best way to conduct business. So you could see here earnings that we've received. Let's just take a look at May 17th. Okay, so May 17th, yesterday. So Tarek rented our car, $52. Chase, $50. Steve, $196. Hirachia, $63. Daniel, $34. K's trip, $170. I'm not sure what that was. This might have been a correction for running over the mileage, the allocated mileage, or gas or something else. 138. And then you can see here. So this is the charges that are coming in, or the commissions coming in. And then this is actually when it hits the bank. So it goes from, you know, the payment is received 140, 34, et cetera, et cetera. So you can see here, you know, we're in the business. I mean, we're collecting these funds. I mean, these are hitting our bank account. I was joking that even Jesus is renting our car. Jesus likes to drive a Mercedes-Benz CLK. He's got good taste. I'm just joking. Renee, Stephen, so on and on and on, right? So a lot of it every day, you know, lots of transactions happening. So this is all May 10th, starting from here. That's all May 10th, May 10th, May 10th, all the way here, okay? And so that's happening every day. There's that Chevy Camaro, right? 206. That was probably a rental for an entire week. All right. So again, we're happy to share this with you. I can download the CSV. Again, once you've signed that NDA, I'm happy to share that with you. And then we can see. Let's go to my dashboard. Let's go to our dashboard here. Okay, so here is our dashboard, and this is basically the activity that's happening in our account. Let's see here. So there's pending requests. These people have requested trips that they want to take on these cars. There's notifications. There's emails that happen. Customers ask questions, all kinds of questions, and that's why we've created we are creating a service desk in India. I have an employee who's been with me for 5 years, and she's actually going to be our service desk ops manager in India. She's going to be offloading a lot of the stuff so that we don't have to take care of it. And her team can take care of a lot of these questions. A lot of times it's the same question over and over again by the customer. You know, what do you charge for going over the mileage? What do you charge for, you know, what happens if I return it with less gas, and so on and so forth. So there's a lot of that. We can see some of the upcoming activity. So this trip is in progress, and this car is coming back. This Mercedes is coming back on Friday. So is the Lexus. So is this Lexus. So is this Mercedes. So on Friday we've got 4 cars coming back to us. Saturday we're going to have 3 more cars coming back to us. Now these trips, these cars are already rented when they come back. You know, these are very, very popular. But you can see basically what's going on here. Again, lots of activity. All right. So I wanted to share that with you. Let's see, a couple of other things. So I mentioned that we are building adjacent channels of revenue with this business. Our idea is that we want to create and seize opportunities as they come along. Turo is not the only platform out there. HireCar is another platform. This is for longer term rentals where we could rent out a car for a week at a time or a month at a time, specifically targeted to Uber drivers and Lyft drivers. Now, when these guys rent out cars, as you can imagine, they're using it like a taxi and they're putting a lot of miles on these cars. So we don't necessarily want to take our nice, top cars and put it on this site. However, we might want to get certain models that, maybe Toyota Camrys, Corollas, Japanese cars that do well with lots of mileage. They retain some value. And the breakdown cost is cheaper to repair. So we actually already are on this platform. We already have 2-3 cars on this platform that we're testing, and the ROIs look pretty decent. So here's an opportunity where we can basically build a adjacent business that feeds our Turo business and helps our bottom line. Okay, so I mentioned before, how we're going to go from 30 to 60. These are some of the ways that we can do that. GM just launched this. I think they launched it a little while ago. So this is basically car sharing with GM cars. So we've registered for this. We're watching it. We don't know if there's an opportunity in there for us or not, but we're certainly watching it. Avis launched something, so we're keeping an eye on the industry. Another business that we're looking into is Airbnb. And Airbnb is a huge, huge multi-billion-dollar market where we can basically get properties and then rent them out short term and make lots of money. So this is a business that we are researching right now. We're not in that business yet, but just like I said before, we are definitely looking at opportunities that are related and adjacent, and we're going to bring you guys, the investors, with us. So when there's an opportunity to invest in this business, the people that come in early, those are the folks like you who are going to get first stab at joining us into this business. Okay, I'm going to share one final thing with you. So I mentioned optimization and how we're very IT driven, and part of that is because I have an IT background. Bilal has an IT background. Many of you investors I know are IT people as well. You have that background. So we're using all of these tools and skill sets to our benefit. So one of the things that we did was we said, okay, let's look at the rest of the, I don't want to call them competition, but let's say car owners. Let's look at the rest of the car owners in the Dallas market and see what they're doing. So we basically created our own software. We hired a development team. I actually have a development team. And we asked them to get into doing some big data for us. So what you see here is actually an instance in time where we captured all the data for Turo for the city of Dallas. So all cars available in Dallas in an instance of time. So we can see here all these cars. If you keep going down, okay, here we go. 200 exactly, because I have a title at the top. 200 cars available. And I can see the make and model, Toyota Corolla. I can see the description. I can see the notes. I can see the ratings. I can see the number of trips. I can see their rates, zip code, all this information. So what are we doing with this information? Well, we're taking this information and we're leveraging it. We're optimizing our fleet to see, okay, what is the most popular car in Dallas? Well, it's the Toyota Corolla. What's the next one? It's the Wrangler. It's the X-Type, Camry, etc., etc. Now, again, keep in mind, data is dynamic. This will change tomorrow and the day after. But it does give us trends. And we can leverage those trends. We can take advantage of that data, again, to optimize our fleet. So we recognize that we need to start doing more of the value cars. We don't necessarily want to swap them for the luxury, but we want to build a value car parallel fleet or add to our fleet some of these value cars, because I know they're going to have great value. So just coming back to the data here. The number one car in that instance of time for Dallas is a Toyota Corolla that has been rented out 138 times. That's phenomenal, right? The next car was the Jeep Wrangler, rented out 90 times. That's phenomenal. So we're leveraging this kind of data. And then we said, well, let's not just look at Dallas, but let's look at as many metroplexes in the country as possible to see trends. So then we said, okay, well, what's going on in Austin? So we can see here, you remember I said Austin just has a different culture? Well, look at their cars. Toyota Prius, Camry, 4Runner. It's just different, right? It's not the same profile as Dallas. And every city we're noticing has some quirks about it. And by grabbing this competitive data and doing this data analysis, we're able now to take this and start positioning models and vehicles that we think are going to do really well in those marketplaces. So we looked at Jacksonville, Miami, Tampa, Dallas, Austin, Houston, San Antonio, et cetera, New York, LA, Chicago, on and on. And we did quite a bit of analysis. And all of this, again, best practices is going to help us just make some kick butt, just some kick-ass ROI that we're very confident that we can take it to the next level. All right, that is basically what I wanted to share with you. That is basically what we shared in the webinar. Again, I'm going to make the files available. I am available if you have any questions at that email. Bilal is available as well. If you want to go see him at his office, just go to his website, bulllegal.com. His address is printed there, and you can go see him and sit with him, look at the portal together. We've got a tremendous amount of interest. Investors are already walking in the door. Funds are already being received. We would love to have you go ahead and send in your investor agreement, sign it, send it in, and let's start doing some great business together. Refer your friends or family, anybody that's been looking for a passive income opportunity in a trusted environment, in a exploding field, segment of the industry like the on-demand, the sharing economy. This is just a great opportunity that, again, we couldn't be more excited about. So thank you again for your time, and I will look forward to speaking with you soon.